Welcome to Aha Math and Science. Well, it's time for the weekly summary. And so before I start it, I just want to thank everyone who has been watching this channel. Your support really kind of means a lot to this channel and give me the motivation to make more videos like this one. And so thank you. And if you have not subscribed to this channel, please click the like button. And so let's get started. And I think this video is going to be contain quite some valuable information. So please make sure to watch the video towards its end. And so I would say that currently the status of this market can be really kind of described by this picture here, which seems pretty calm, but it's really kind of like before a major storm is going to hit. So let's talk about that. So you're probably hearing a lot about the R word, recession word in the media a lot these times, including this renowned investor, Stanley Druckenmiller. In a recent interview, he said, "We are on the brinking of a recession and face a hard landing." So really, this recession scenario is not being kind of recognized by more and more people. I guess perhaps only like Federal Reserve has not really kind of acknowledged that yet. But it's really kind of different. Like, oh, if it's a recession, therefore the market will be down. In fact, sometimes the market can kind of like gets disconnected from the fundamentals quite a lot. So we also want to keep these words in mind, which is markets can remain irrational longer than you can remain solvent, by John Kaynes. So this is really kind of speaks to the complexity of the stock market. Oftentimes, there's a lot of deviation from the mean. So although that in the longer term, we expect that the index is going to revert to the mean, but in the short term, we can actually see that a lot of extremes in the stock market. So just be aware of that. Okay, now just a quick recap of what the market did in the last week. It's again some crazy divergence, which I have been talking about for now several weeks now. So on Friday, all the major indexes kind of closed in the red, while the VIX went up just a little bit. For the whole week, the same story. You can see the Russell 2000 was in the red. It was down about 1%, but the Nasdaq Composite was green again. And for the week, VIX was down by about 1%. So this crazy divergence between the small caps, which is the Russell 2000, which is really kind of underperforming compared with the larger caps, especially the technology companies. It's really kind of like become extreme. So we're going to analyze about this divergence in a little bit from slightly different angles in today's video. So first, just kind of really a quick look at the VIX. So the VIX was closed at a low of about 15.78. That was on at end of April 30. So yeah, so this is like kind of the low, that the VIX had all for more than like a year. The last time he had this low was like a 1501. That was in October 2021. So for the week, VIX was down a little bit. So again, you can see that this VIX is kind of like telling us a lot about the market does not really kind of feel like there's an immediate sort of danger ahead. So we're gonna keep watching this level, see if that gets broken. And certainly, if it does kind of get broken, it will probably imply the market will win up, and even could. The VIX tested the previous low of 15.01. So something to keep in mind. Now back to the divergence. So I came across this plot by Julian Timmer of Fidelity. He said the micro caps are usually much stronger in an early bull market. So this is the Russell micro cap index. You can see that it was in this downward trend, for almost like 2 years now. And it was kind of underperforming the larger caps, and especially the technology companies quite a bit. And you can see the ratio of, here's the ratio of the Russell microcap to the SP 500 was at a level that it has not reached for almost like 20 years. So it signifies a lot of weakness in the small caps or the micro caps compared to the larger caps. So inspired by this analysis, and I kind of went ahead and also analyzed the ratio of the Russell 2000, which is the 2000 small cap companies, to SP 500, so the large caps. Now SP 500 is kind of dominated by some of the technology companies, the large cap technology companies. So you can see that this ratio of Russell 2000 to SP 500 kind of fluctuates between 0.3 and 0.65. So at the level of slightly above 0.4, obviously it already feels like the small caps kind of really oversold. But you can see like in the history, you can sometimes get even more kind of like this divergence between the small caps and the larger caps. But what we are really interested in is, what does this chart tell us about the current cycle? So when you actually look at this ratio here, you can see this is when actually it bottomed during the pandemic. So this economic cycle is very, very quick. And very quickly, you can see the small caps kind of start to outperform the larger caps, indicating people are very optimistic about the cycle, the economy. So that's when actually the cycle kind of peaked right here. And then ever since, you can see this ratio start to decline. And then there's a little sort of a rebound right at here. And then in the last few months, it's been declining again. And now you kind of ask, so can we see kind of similar scenarios in previous cycles? We know that this is already, we are in a bear market, and this bear market has already lasted for like more than a year. Actually, now it's become like a year and a half almost. So this is not like an ordinary bear market. So the only thing that we can compare to is perhaps the 2008 and the 2000 bear markets. And then when you look at these two bear markets, you find the similar pattern. For example, in the 2008 bear market, the economic sort of cycle kind of peaked right here when the small caps kind of outperformed the larger caps by quite a bit. And then this ratio started kind of going down. There's a shorter rebound, and then it started to decline again, this ratio. So small caps start to kind of underperform the larger caps again. And we see the similar trend. So during the middle of 90s, and the economic cycle kind of peaked, and then it started to kind of decline. And then you can see there's also a little bit rebound right at here, and then decline again. That's almost kind of approach to the end of 90s. And notice in each of these cycles, for example, here you see a spikes. So the spike probably kind of tells that people start to kind of get more optimistic about the economy. So the small caps start kind of outperform the large caps. But this is actually not really the start of a new bull market. This is actually the bear market for this cycle ended in October of 2002. So well after like this initial optimism, but then the market tanked again. And that's when actually really kind of like the market kind of bottomed. Similar things happen. You see another spike at here. That indicates people start to kind of become optimistic, but that optimism does not need kind of last too long. And then the market tanked again. And it's not until like March of 2009 when the market actually bottomed. But nevertheless, you can see in order for the market to bottom, you first have to see the small caps start to kind of outperform the larger caps. We are not there yet. You can see we are pretty much similar to this sort of second leg of decline of the small caps. And if history is any guide, we should kind of start to see people start to get optimistic about the economy, and then we might start to see a spike of the small caps that can outperform the large caps. So where this spike, we don't know when, but these are the signature we'll be looking for. So this is the first signature that tells that we are not that far away from the bottom of the bear market. But then the bear market usually did not come end again after some additional time when you can confirm that this initial optimism spike just kind of gone, and then you would see that perhaps, either kind of the small cap versus the large cap ratios start kind of go sideways or just go slightly up, and then eventually the market will bottom. So the first signature we're going to see is this initial spike of the small caps outperform the large caps. And this time frame, we don't know how long it will take. It's definitely some time. It's not measured in weeks. It's definitely going to be measured at least in months and possibly in years. So these are the things that we are looking at next. Now, in the just like a few days ago, I also did a video about the Apple share price, and we argued that it just kind of broke above this downward trend, and it's possible that it's going to make a new all-time high, and then they perhaps kind of go to the $200 level. So this analysis is kind of based on not just one example, but actually 6 of these examples. Whenever this downward trend, same slope, whenever this downward trend was broken, it always make a new all-time high. So you can see this one, it did not break above, so it did not make a new all-time high. But all the other cases, it did. And we argued that our current scenario could be more like this one. So in other words, we will probably see a new low later on for Apple stocks. But first, it's going to make an all-time high. And then somebody asked me about in the comment section about if we can have a similar kind of pattern for the Nasdaq Composite or the QQQ. So I went ahead and tried to kind of analyze the QQQ. And this is what we see on the log plot. You can see that clearly we have broken this downward trend. So that was broken. But when I look at this chart and look at searching for a similar sort of downward trend, we only be able to find 4 other cases. And then all these cases kind of happen during these big bear markets. You can see the other ones, maybe you can identify some kind of downward trend, but it's not kind of a sharp downward slope like this one. So we cannot really kind of apply, to the current scenario. So look at these 2 cases have the same downward trend slope. One is happening at here, where the market the QQ was not able to break above the downward trend. It just kind of tanked. And then there's another downward trend, exact same slope. I just did a copy paste of that slope on the log plot. You can see it did eventually break above it. And then this is currently the start of a new bull market. And similarly, you can see there's a downward trend at here. It's set by these 2 tops. It did break above, but then it did not last long, and it eventually tanked again. But in the second attempt, you can see these 2 tops also establish exactly the same downward trend slope. These 2 are parallel, and the slope is the same as exactly this one. Eventually, the market will break above it, and then this is the start of a new bull market. So it looks like for these big bear markets, you don't have the bottom is in until the second downward trend was broken. So, and look at the similarity of this one versus this one, because you can see here, the first downward trend was broken, and that is different from here. The first downward trend was not broken. So here and here, you can see the first downward trend was broken, and we suspect we're going to see basically another downward trend sometime down the road. And that's going to be where the resistance is. And so kind of follow this kind of pattern. So we suspect something like this might happen, where you have to kind of bounce back and twice or 3 times. We don't know exactly what will happen here. And this is just like really a wild guess of based on this kind of pattern. But if this kind of history is kind of any guide, we suspect it should be at least a 2 downward trend slope. And then when it break above the second slope, the second downward slope, that's when the real market bottom is in, and based on the pattern analysis. So a lot of information. I think this is one of the sort of valuable videos I have made over the past several months. So I hope you really kind of enjoy this video and find the information presented here quite interesting. Again, your support really means a lot to this channel, so please do not forget to click the like button and also to subscribe to our channel if you have not done so. And feel free to refer this channel to your friends, and your comments and feedback are always welcome. And thank you for watching.